Why do all these rich people say you don't have to pay taxes?
Because you don't have to pay taxes. The tax game is a system, and until you learn that it is a game, you are not going to be able to leverage the tax code. The wealthy people have been playing this game for years, and they have fun at leveraging the tax code.
Yeah, so I think you would agree, but I'm just going to say it. I think that real estate gives the most tax advantages out of anything in the tax code.
Absolutely.
So why is that? What is it about real estate that allows you to not have to pay taxes?
What it is about real estate is when you're going into real estate, you're buying such a big asset. And because you're buying such a big asset, the government is going to turn around and give you depreciation. Depreciation allows for you to create a paper loss on your tax returns that can offset W-2 and 1099 income depending on how you're leveraging that investment property. So you see a lot of wealthy investors in buying real estate year over year and doing strategies like the cost segregation study to create a paper loss on the returns that can offset their active income.
So explain to people how depreciation actually works, like numbers wise. Like if I buy a property here in Vegas, you know, let's say it's a $500,000 home, you know, median price, you know, how is that going to help me not pay taxes?
Yeah. So when you buy an investment property, you're buying two different things. You're buying the building and you're buying the land. The IRS only allows for you to write off one component, which is the building. So here in Las Vegas, you get a lot of building value compared to land value. You may spend $500,000 on a property, but $400,000 of it is the building amount. Maybe only $100,000 of it is the actual land amount. That $400,000 you get to write off on your tax returns, and that's called depreciation. However, it's taken over the course of 27.5 years. Most savvy real estate investors do not want to wait 27.5 years to claim all of their depreciation. So they'll do strategies like the cost segregation study to accelerate depreciation.
So how much extra would a cost segregation study allow you to write off?
A cost segregation study on average can help you write off anywhere between 20 to about 30% of your building value in the very first year. So if you have $1 million property, that could be a $250,000, $300,000 deduction in the first year of ownership.
So if I bought $1 million property here in Vegas, right? Let's say I made $300,000 in like net income.
Yeah.
Essentially, by buying the $1 million building, I will pay no tax on the $300,000 of income.
If you're able to use the real estate losses, and that comes down to whether or not you're a real estate professional or if you're running a short-term rental rule, because the IRS has some rules in place on whether or not you can use your real estate losses to offset your active forms of income.
Okay, so what is a real estate professional then?
A real estate professional is someone who can show the IRS that you spend 750 hours managing your own investment property. But the catch here is that you also have to show the IRS that you're spending more time managing your investment portfolio than you're doing any other job. So for many W-2 taxpayers that are working 40 hours a week, it's extremely hard to qualify as a real estate professional unless you have a spouse that maybe hasn't returned to work that you can qualify as a real estate professional on the tax return. If you can't qualify as a real estate professional, spending 750 hours, more time in real estate than any other thing, then it might make sense for you to look at the short-term rental strategy.
Okay, so I mean, what does that equate to per week? 750 divided by...
It comes out to about 15 to 18 hours a week.
I mean, we're not talking a lot of time.
No, not a lot of time.
So how many of you guys would call yourself real estate professionals? Okay. How many of you want to be a real estate professional since you can just not pay taxes? All right, cool. So we're going to teach you how to do that, all right? The IRS is going to... I don't know if anyone from the IRS is here. So anyways, inflation is crazy. Right now, $3 won't even get you a gallon of gas or a cup of coffee. But the good news is it'll get you my Wholesaling Blueprint and a trial to Wealthy University. You might be wondering, Ryan, what are those? Well, Wealthy University is our online community where you're going to be able to network with 6, 7, and 8-figure real estate investors and entrepreneurs. We have live calls every single week. You can come and ask me questions directly every single Tuesday, and you have access to all of our courses, all the recordings of WealthCon, and exclusive events. Along with that, you're also going to get our Wholesaler's Blueprint, which is going to give you all the scripts we use when we talk to sellers, all the contracts that we've used to lock up hundreds of deals, and you'll even get my Contractor's Guide, which gives you all of the materials we use in our house flips. And if that wasn't enough, I'm also going to give you a copy of my 2 books, The Wealthy Way and Flip Your Future. All of that will be yours for just $3 by going to Wealthy University wealthyuniversity.com. There is no better deal for $3, especially when inflation's on the rise. So instead of maybe getting half a cup of coffee, go to wealthyuniversity.com and go get the Wholesaler's Blueprint and your trial today. We got to get them working 15 to 18 hours a week.
Correct.
And I think wholesaling counts as being a real estate professional.
100% it does.
Okay.
Yes.
So flipping houses, wholesaling, Airbnb,
yes,
everything we just talked about would all qualify you as a pro.
100%. And those hours are actually called material participation hours by the IRS if you're writing this down.
Okay. How many of you guys are writing stuff down? Okay.
There we go.
All right. This is really important because, guys, think about this, right? You could go make, let's say, $1 million, but when you pay tax on it, you're going to have to pay 40%.
Yep.
But isn't it a lot easier to make $1 million and then just go buy the amount of property you need to buy so you pay no tax on it and you build long-term wealth because you're getting good deals? Like for me anyways, I discovered it back in like 2017.
Yeah.
I started using these different tax vehicles, such as self-directed IRAs, which I want to ask you about.
Yep.
And then depreciation. I started buying rental properties in 2017.
Yeah.
And I could see on my tax return, I'm like, dude, I made a lot of money. And then I'm like, I don't owe as much as I thought I was going to owe.
Right.
And it was because I was just starting to buy rental properties. And like the thing that I did was that I learned how to raise other people's money to buy these rental properties. And so if I bought $5 million of rentals this year, let's just use a hypothetical number, and I still didn't put any of my own money into buying them because I raised other people's money, which we're going to learn about later today. I still get the same tax write-offs even though I didn't invest, right?
That's 100% correct.
Yeah.
Depreciation is the most powerful deduction in the tax code because when I'm teaching people about ways to offset their taxes, we can start a business, but if you're a business owner, you have to spend money to get write-offs. You can only buy so many cars that weigh over 6,000 pounds. You can only hire so many employees. You can only spend so much money on advertising, right? But when I tell you to invest in an investment property that could pay you and someone else is paying down your mortgage, and you get this depreciation thing, it becomes the sexy conversation in the room.
Yeah. I think what people don't realize is, buying rental properties, and I say this all the time. This is why I say I'm not anti-rental. I think people just don't understand what they actually are.
Yeah.
At the end of the day, for me, a rental is more like a piggy bank. It's not something I'm like trying to get this thing to produce me money to live off of every month. It's more like a piggy bank where it's growing in value from appreciation and principal pay down. But more importantly, the moment I buy it, I am saving money today that I would have had to give the IRS anyways, right?
100%.
And so, people don't think about it this way, but if like I save $100,000 in taxes, to me, that's the equivalent of making $8,000 a month.
Yes, because when you save money on taxes, that is cash flow. I tell people this all the time. You're not going to get rich from buying a couple of single-family homes or a couple of duplexes out in Indiana. Believe me, I've seen millions of tax returns. You're not going to get rich that way. You will get richer by offsetting your biggest expense, which is your tax bill. So by investing in real estate and utilizing depreciation, you can create a loss that offsets your W-2 or 1099 income. I have W-2 taxpayers all the time that are going back to HR and adjusting their withholdings because they're taking more money on every single paycheck, knowing that they have depreciation that's going to be able to offset the tax balance. How many people in here would rather go back to their employer after this event and adjust their withholdings right now because they know exactly how much depreciation is going to be able to offset their taxes? Let me see your hands. That's what I'm talking about.
So I think a lot of people didn't raise their hands because nobody has employers. They're all entrepreneurs. Hopefully, okay? That's the goal anyways. So let's talk about this, right? I mean, rental properties, in my opinion, are the best way to beat the tax code because they do all the things we mentioned, right? If you find great deals, you can use other people's money to buy them. You can get the depreciation to write off your active income.
Right.
You get the principal pay down. You get all these benefits that are amazing. But you still got to get good at finding deals.
Right.
You still have to make this is the thing I get on people. They're like, I want to buy rentals. And I'm like, you don't even have any income to write off. What do you need rentals for? Right? So rentals only make sense when you actually are making money.
Right.
Which was the whole point of the panel before. Okay? You got to make active income some way, somehow, to even worry about a tax problem. Nothing irritates me more when I hear about somebody making $100,000 wondering how to reduce their taxes. I'm like, you have the wrong problem you're thinking about. You need to think about how to make $1 million. Quit thinking about how to save on 100,000. Think about how to make $1 million, then worry about your tax problem. Can you guys agree with that?
Agreed.
Okay. So let's talk about another strategy that I'm a fan of, which is a self-directed IRA.
Yeah.
So explain a little bit about how those work and how they can limit your taxes and invest.
Yeah, if you want to invest in real estate with your retirement account because maybe you're not happy with the returns you're getting in your IRA, you can create a self-directed IRA. How this works is by establishing a single member LLC, or it could be a partnership LLC, and then you establish a retirement account IRA for that LLC and roll over your existing IRA into that LLC's IRA, and you self-direct it with a custodian. Once it's self-directed, you are in control of what you want to invest in. If you want to invest all that money into Apple stock, Tesla stock, or buy investment properties, you can absolutely do so, and that will be held inside of your IRA. You'll still get depreciation and all the other tax benefits that come with owning an investment property.
So who here has a 401k or an IRA? By a show of hands. Okay. I would assume most of you guys got it from when you had a job, or if you currently have a job or whatever else. Correct me if I'm wrong, but the rule is you can move it over to a self-directed if you're no longer with that employer.
That's 100% correct, because it becomes a rollover IRA, and then you can move it into a LLC and then self-direct it.
And so now once you control your retirement account, you can now buy rental properties, you can use it to flip, wholesale,
Yes.
do all of these real estate activities with money that you used to not control.
100%. You can also do this inside of a Roth IRA for some of you guys that are thinking out there that I want to do this tax advantaged.
So what about what's the benefit for somebody who wants to start a self-directed IRA today? You know, maybe they got a one-person company, or they got a few employees. Why would they want to start a retirement account today?
It's important for you to kind of think about your retirement and how you wish to build your wealth, and a self-directed IRA gives you control of your retirement. Personally, when I first got my 401k, I really didn't know what was going on. I logged into the account. I checked it maybe once a quarter, but I really didn't understand what was going on with those investments. Until I self-directed my own IRA, was I in full control of my own retirement. And I personally believe in real estate a lot more than I believe in stocks. To each their own. That being said, I chose to self-direct my IRA because I wanted to control my outcome.
And so with that, I mean, for me, the other part that I think about is if you start, depending on how you set your IRA up, all these gains that you make, let's say I use my IRA to flip houses or to buy more rental properties and I sell them and do these things, I'm not getting taxed on that, right?
You as an individual is not. Your IRA pays taxes inside of the IRA. You almost have to look at your IRA as another person. It's going to go down on the title. It's going to go down on the loan, and you can buy real estate with your IRA.
Yeah, and that's what I think so many people don't realize, is that there's so much money to be made within a retirement account with just, hey, today, like if I contribute towards my retirement account, I could get a write-off today if I do it that way. Or I can do what's called post-tax giving, or, contributing. And once it's post-tax, then it doesn't get taxed anymore, right?
That is 100% correct. So we have some of our clients that are sitting on 2, 3, 5 million inside of their Roth IRAs because they made the sacrifice very early to buy real estate in a Roth IRA instead of a traditional IRA, and that money has grown, the properties have appreciated, they paid the tax once, and the property continues to appreciate without any gain later when they pull it out.
Yeah. So we actually have a partner that we use for self-directed. They're called Horizon Trust.
Yeah.
They're actually outside. They have a booth. I think you guys have a QR code. So for anybody who wants to, start a retirement account, for anybody that wants to roll over an account that they don't currently self-direct, Horizon Trust can help you guys out. They are also able to set you up the account right there. You can go talk to their team. They're an amazing company. I have worked with them now for years. A lot of our students have worked with them. And I myself have a self-directed IRA. So I like to just buy real estate, invest in my own deals, do things because I know it's going to limit my tax bill. So you guys can go talk to them in their booth after this. If they have the QR code, you guys can book a call with them and all that stuff too. So Karlton, as we wrap up here, what would you say are some other things that people don't realize about the tax code and how real estate and everything else can help them out?
I would say that most people are looking at the tax game as there's only a few things that you can possibly do to reduce your tax bill. I can invest in a 401k, I can buy stuff, but there's so many different things that you can do inside of the tax code. Some of my real estate investors have started buying into solar energy or started to invest in oil and gas because oil and gas gives the same depreciation as real estate does, and you get to write off the intangible and tangible drilling costs on your tax return. So I actually like investing in oil and gas just as much as I like investing in real estate, because if I don't want to put such a huge down payment down in order to offset my taxes, I can choose to invest in oil and gas and get some of the same benefits as real estate. So I think that people have to first align themselves with the right mentor or the right teacher to get access to more information, or else they're going to be limited to whatever their CPA just tells them.
What are your advice for finding a good CPA?
When you're thinking about finding a good CPA, you have to understand your professionals first. You may find a CPA that is really good at being a CPA, a certified public accountant. By trade, their job is to account for all of the items that go inside of your tax return, and they might do a great job of filing your returns. But outside of the months of January, February, March, and April, they may be hard to reach. You're sending them different videos and things that you found on YouTube, and they're not responding, and it doesn't really seem like they're proactive in trying to help you reduce your tax bill. There is a difference between hiring just CPAs who file returns and tax professionals who help you reduce your tax bill in real time. As a tax strategist, I'm typically with entrepreneurs and investors like yourselves outside of the months of January through April, while you guys are making financial decisions, helping you leverage the tax code. So when you get to your CPA's office in the months of January, February, March, and April, when everyone else who has a pulse has to file their tax returns, all you're doing is tax filing at that point in time.
Yeah. The one thing I always say is when it comes to accounting and taxes and everything else, you don't just wait till April. Like you're already too late. I mean, if you even you wait till January, you're too late.
Yes.
You can only make the moves this year. So if you guys are you're having a good year so far and you're anticipating, continuing to have a great year, you have to literally make the moves now. You have to buy real estate now.
Yep.
Because it's not going to count if you buy it January 1st. You have to do it right now.
Yep. All the strategies that you want to leverage have to be implemented prior to December 31st, other than your 401k account that you can't touch until you're 59 and a half, and you guys are already doing that. That being said, it is your control right now to figure out how are you going to leverage that tax code with the 5.5 months you have left in the year.
Awesome. Well, Karlton, dude, did you guys learn a lot? Yeah, awesome. Well, dude, I appreciate you, man. Yeah.
Appreciate you, bro.
Thank you.
Thanks for having me on.
Yeah.
Much love.